Hey, welcome everybody. It's Monday morning. It's time for Trader Talks. My name is Brent Moores, and I'm just glad to be here with you. I hope you all had a nice weekend. And one of the great things is today we get to start off with Mr. Ray Kimbrell. We get to see Ray. You're on this occasionally, Ray, and more often people are seeing you out on the road. But good morning, Ray.
Well, good morning to you, Brent, and everybody else. It's great to be here, and looking forward to a great show. Yeah, we came back from Boston. We did a
Yeah.
live event out there, and it had a great time. So it's great to be here with you all.
Absolutely. And so, for those of you who don't know what I'm referring to, Ray is kind of one of the main people who are out on the road for us as we do workshops around the country. And I highly encourage people to attend those and check those out if there's one in your area. And if not, if you have a little time and want to go on a little road trip, that's a good thing to do as well there. We are joined by Scott Thompson in the chat. Appreciate Scott. And so as you have questions, feel free to type those questions in the chat. There's a lot of familiar names in the chat. We're grateful you're here. And between Scott and Ray and myself, we'll do our best to get your questions answered. You can follow us on X at Brentmore CS, at Ray Kimbrell CS. And we post additional content there that may be of interest to you. Before we get too far into this, though, let me just mention a few important things. One, the information today is for general informational purposes only and should not be considered an individual recommendation or personalized investment advice. Specific securities are used for examples only and to illustrate things. They're not recommendations. We'll look at individual stocks today. We'll look at indexes today. They aren't recommendations. I don't plan on hitting on options today, but just realize options don't carry a high level of risk and are not suitable for all investors. The paper money software application, that's the Thinkorswim desktop platform, though we will use today. It is provided for educational purposes only. Schwab does not recommend the use of technical analysis as the sole means of investment research. And all investing involves risk, including loss of principal, virtual currency, derivatives. Trading involves unique and significant risks. And let's see, what else do we have here? I think that's the main thing. Just realize we're not giving you any recommendations today. We're just trying to talk about the market and help you out here. Hopefully that's the case. We'll start off with the major market indexes as Kevin normally does in this webcast. And we'll look at individual sectors, look at stocks in the news, upgrades, downgrades, and we'll try and hit up some different time frames and look at potential. We'll do some technical analysis. Even though we say that's not the only form of investment research you should do, it is something we do in this webcast a fair amount. So let me bring up the Thinkorswim desktop software here. I'm going to start off with the S&P 500, Ray. Ray, we've been on a tear. We're down a smidge this morning. Probably not a shocker given news over the weekend. I mean, last Friday it was all, roses and butterflies and everything was looking good. And then, some little hiccups in the situation with Iran this weekend. And so not surprising we're having a little pullback, but not a big one. What are your
Yeah,
thoughts?
I mean, I agree with you. It's been it has been taking off like a rocket there. Look, as the charts are looking at it. Um, I think the news may be a little unsettling to some investors, to the general markets as a whole, and that's why we're seeing that slight pullback. It's going to be interesting over the next couple of days when we get close to the end of the ceasefire. What's going to happen if they're going to come to the table and talk? Iran, that is.
Yeah.
Um, but it looks like that's kind of the wait and see kind of mode in the next couple of days. It seems like.
Yeah, before for a while I was looking at this as kind of a resistance level. Of course, we blasted right through that.
Yeah.
And if we were to get a pullback, Ray, it seems to me this would be an area where we could potentially look at support. Not only is it kind of a key number there, the
Hmm.
7,000 level, but obviously it's the highs we hit before. So, that's no guarantee that that's going to happen. But we are seeing a little bit of a bearish move today. But I think it's notable. I mean, this is an all-time high on the S&P 500, which given what's going on in the world, I think it surprises some people. To be honest, it's probably surprised me a little bit, Ray, that we've seen an all-time high in the S&P 500
Yeah.
after all that we've seen here.
Yeah, I was a little shocked at it myself when we were going through the class even this weekend, and we're looking at this and we're all discussing that same thing, and we're seeing that uh, what's going on. Well, the markets are looking at it a little differently than kind of I thought, and as you were talking about, and I do highly agree with you. That is if you look back in time, that 7,000 mark, that was a very strong level of resistance earlier, and then it did break that. So I think retracing back to that level can be um, uh, a good place to look. And as you said, there's no guarantee that that's going to, hold but as we look past and how technicals work, that's probably the best level to at least focus in on it initially.
Yeah, and obviously this is a news-driven market, so any news that comes out, whether it's from the Gulf area or whether it's from
Mhm.
um, economic news, we have earnings. We'll talk about earnings season coming up. That certainly can affect the market.
Mhm.
This can all affect things, but um, that, but just from a standpoint of we've gone up. How far have we gone up here? From our low to here, we've gone up about 13% over a very short period of time. That's a big run up. Regardless of the news, often you expect kind of a little bit of a breather when you've seen that happen here.
Yeah.
Let's flip and let's look at just intraday. Now we've only been here a few minutes into the day. In fact, let me do a 5-day, 5-minute, and I'm going to go and I'm going to pull up some pivot points here, Ray, just to kind of look at some potential support and resistance levels here. Here's our pivot point. We're kind of right at it, right where we're at right here. So this is kind of a key level. If we go, and we're just talking intraday here, but here's your R1 level, here's your S1 level. From an intraday standpoint, I mean, we're kind of, I don't know what to
Yeah.
say other than we could go either way on this, but if we do, once we break one way or the other, we'd consider this to be resistance, this to be support. And then if we break up, this may then act as a support level. If we break down, this could potentially act as a resistance level. So that's the intraday chart there. Any thoughts on that there, Ray?
No, I think you're right on the money there. Yeah, it's going to be an interesting. As you said, we're only in for a few minutes now. Interesting as the news gets like, and as the news drives this market, as it has been going through the day. We'll get a better feel, obviously, for which way it's going to go. But hey, it's looking a little, starting to turn a little. Actually, the Dow's, we're going to get there next probably, but the Dow's already turned up a little bit. So it's like,
Yeah, yeah, and so you do get these differences
yeah,
in the indexes, and I mean, in fact, one of the things is from last week, as I mentioned, we hit all-time highs on the S&P 500. Well, Nasdaq all-time high, and
yeah,
I don't know, I don't really have that much more to say on the Nasdaq than we said on the S&P 500. I guess in terms of the level of if we were to get a pullback there, that's a level that I would maybe look at for some support. You could also do something like pull up a Fibonacci retracement level there and uh, just pull that up and go and look for potential pullbacks there. And here's your 23%. This would be a little bit of a bigger pullback if we were to get there. So these are all support levels that we could potentially hit on the NASDAQ, but NASDAQ's looking pretty similar to the S&P
mhm,
500, Ray.
yeah. And I think that level you've identified there as a potential support level if it pulls back to is looking pretty strong. The 23 0.6% level in the Fibonacci. Also, if you look back, that was a pretty strong level earlier in
Yeah,
the year too, in last year, right
yeah,
on that
that's
money
right.
almost.
That's basically corresponds kind of in
Yeah,
this area there. And so you can see that as, these are all potential areas. It may not ever get there, but that's kind of what we're looking at in terms of support
yeah,
levels. Of course, if you'd like to, some people will look at this and try and come up with target levels. If you want to draw your Fibonacci, by the way, and come up with target levels, you just got to go backwards from, let me just clear this out. And if you go to the Fibonacci and draw from high to low, let me just shrink this down a little bit.
Right, I
You
love
end
doing
up
this.
with potentially levels, put levels up there, which, it doesn't mean it's going to go there anytime soon. It doesn't mean it's going to go there at all, but
Yeah.
that's one level that some people will look at.
I love doing this in the workshops too. We do this in classes, and we'll do it next week when we do our virtual workshop. But drawing what direction do you draw the Fibonacci?
Yep.
And so I'm glad you pointed that out. Yes, folks, you do. You draw from high to low when you want to get that upward target. So don't forget that.
So tell us real quickly, Ray, about your workshop next week. What's the virtual workshop that you just referred to?
Yeah, so next week, virtual workshop, Scott Durfee and myself will be teaching the technical analysis class. It's 4 days. We'll go hour and a half each day. I believe it starts 5 Eastern. If you go to schwab.com/coaching, you can see it in there and sign up for the class. Look forward to have a lot of folks. We got a lot of folks signed up for it right now. I think it's going to be a great turnout. And Scott and I are very happy to bring it to you back. We did this during the COVID time frame for almost 3.5, 4 years. Scott and I were every night out there teaching something. And so we look forward to having you come back. And it's going to be a good time. So the 27th will be day 1.
Yep, right there.
Yep,
So
there it is.
check that out, everybody. There. Just as a reminder how to get there, schwab.com/coaching, live webcasts and virtual workshops. And then to make it a little easier, you can uncheck webcast there. I don't want you to normally do that because I want you to see the webcast, but there's a lot of webcasts and not as many virtual workshops. So to make it a little bit easier, just uncheck webcasts, and then you can, that kind of isolates that one there. So there,
one more little small plug that we do. And when we're in the virtual workshop, we do refer to the webcast a lot because tell you what, folks, your coaches are phenomenal. And, we get to teach it a little bit here, but then to re-hone your skills and rehear it again and again, use the webcast. They're a wonderful tool.
Yep. Awesome. Well, hey, let's move forward. Small caps, it's a broken record. We're on we hit all-time highs. A little bit of a pullback today, but I don't know what else to say. I won't draw the Fibonacci again, but you guys know how to do that. But, potential support levels if we get the pullback, probably something like that. Now, one area where we do see something a little bit different is the S&P 500 equal weight, where we're looking at the S&P 500, but we're not given that extra emphasis on the biggest companies there. The smallest company, and it's still a large cap company to be sure, but the smallest companies have equal weight. We actually aren't at all-time highs on that equal weight. And that happens, we've seen this a fair amount, potential resistance here, even though we're actually in the green a little bit today on this there, Ray. Sometimes, news could certainly drive this higher. It just partially depends on what types of stocks are participating in the rally and, what sectors are showing some strength.
Yeah. And again, that's kind of interesting to see how where that is compared to the S&P 500 traditional look at and how that's moving. But yeah, it's definitely, still following that same pattern that we've been looking at. And over the last couple of weeks, it's like, wow.
Yeah. And so I'll get back to sector performance in a little bit, but I just to illustrate the point. If this is the S&P 500 right here, so here's IT, for example. And you can see it's kind of separated. So it shows the relative size. The size of the boxes I'm drawing, are the size of the representation of those by market cap in the index, in the S&P 500. So let's see. So here is IT. And now look at the size of the companies here. NVIDIA, big box, big market cap. This weighs the whole index quite a bit. Apple, big box, big market cap. Microsoft, and so on. Alphabet for communication services. Financials, a lot of smaller companies. So even though it's it is a fairly big box compared to some of these others, financials representation is fairly high in the S&P 500. Not as big a companies typically on there. But when you start to look at some of these, here's
Yeah.
materials, here's real estate, here's utilities, staples, and energy. In other words, if you take one, two, three, these 6 sectors right here, they all are about equal to maybe communication services or financials and smaller than the impact of IT on that. So when you
Yeah.
see the difference in the S&P 500 equal weight versus the S&P, that's why. Hoping that's making sense there. Any thoughts
Yeah,
on that, Ray?
that's a great way to bring that to light. That nice visual as to how that equal weight kind of why you see it different than the S&P 500. You know what I mean? And so yeah, it's a good way to see that. And a lot of people, I don't know if they realized or seen that before. And I'm glad you showed that so they can see. Oh my gosh, you mean yep, all these little bitty companies compared to the big conglomerates, if you will. Yeah, it's a good visual for that.
Yeah, yeah. Okay. Well, hey, let's move on from the indexes and let's do this. Well, the major indexes, I should say, because there's some
Yeah.
other important indexes to look at. One, the VIX. What are you seeing on the VIX here, Ray?
Yeah. So you're seeing that correlation with the indices moving up, the VIX pulling back. People are getting less nervous about things, so to speak. Um, you got that, excuse me, that pullback coming in on the VIX. And you can see where you get that unrest and what happens and how that correlates to the price and what's going on with the market as a whole. And you can see the little jump up. This is, as of today,
Yeah,
you
a
know.
little bit more anxiety in the market. So just a measure of that we're not going to talk about trading options today, but this is just basically comes from options pricing, but it also can be used by stock investors. If you've
Yeah.
never don't care about options, you can still look at the VIX and see kind of what people are thinking about the market. People call it a fear gauge.
Yep.
It doesn't mean so in general this is going to go inverse what the S&P 500 does. However, there's other things that are correlated here. Let's look at oil prices for a sec. And boy, that kind of looks a fair amount like the VIX. It pulled back. We've had this pretty good run, pull back. Today, we're up a little bit
Little.
on oil. And these are both going to be kind of inverse what the S&P 500
Mhm.
is.
Yeah. And again, you almost if you overlay that onto the actual index chart, like an index like like the SPX, whatever, you can kind of see them almost direct opposite of each other
Yeah.
as they go on. It's a good measure of that. Oil drives a lot of things. Everything in your life has petroleum product in it some way, way or the other. I mean, cosmetics, plastics. I mean, you name it. It's
Yep.
not just gasoline for your car, and so that's why it's such a mover, so to speak.
Absolutely. And so this is crude oil. This is West Texas Intermediate. Sometimes you'll hear people talk about Brent crude. You can look
Mm.
that up if you like. And just remember, these are future symbols. We're not talking about trading futures today, but if you want to see the prices /BZ of Brent crude, typically it runs a little bit higher than the West Texas Intermediate. It's a little bit of a heavier crude. You can look at while we're on petroleum products, you can look at heating oil, kind of the same general
Yeah.
trend. Well, look, when you're refining oil, what you you're basically heating it up, and the stuff that comes to the top is like crude oil, Uh, so the lighter crude, and but then down you get like
Here,
naphtha,
here,
and
here.
then you get heating oil, or that lower, and then you can get just pure, just oil oil that's used for like machinery and stuff, down lower. And so it's just all part of the same process. Um, that is, so the prices are going to be related. And of course, right now, it's a global market. So even though
Yep.
the US isn't getting a lot of oil from coming through the strait, it's a global market, and global oil prices affect US
Yeah.
markets.
And I think a lot of people misunderstand that because they always hear, but we don't get our oil from there. How come it's, how come it's affecting our prices? If we have our own oil, it's like, well, it's a global market, and that's how the companies have to buy the oil, sell the oil, and so on.
Yep, absolutely. So, what anything else? How about we look at let's look at more metals. Let's look at gold here.
Yeah.
And um, what are your thoughts on gold? Again, we're looking at the prices of these here, even if we're not trading these here.
Yeah.
What are you seeing here?
It's kind of I remember going way back. This is way back now, college days for me. Okay. A professor.
Go back a
That,
few years there, all right?
yeah. So I got out of college in '84. I graduated. So one of our textbooks was the Wall Street Journal, and he would start a class off with you had to buy that the newspaper as part of our class as a textbook, so to speak. And he would always refer to gold prices and the dollar, and see what's going on and how it correlates and how the markets correlate to that. And a lot of times you see the inverse reaction to that. But gold's going up, and I haven't looked at the dollar lately, but I don't know. I think the dollar's been staying pretty stable. It's not as moved as much, but it's a good
There's
way
the
to.
dollar. There's the
There
price
you
of the
go. So
dollar. Yeah.
so it's coming up as well, and gold's coming up a little bit. So the last turn up here, you can see it's kind of moving up. It's been doing down generally, but if you overlap those on top of each other, you can see that. And it's a good way to kind of look at what's going on with the dollar, the strength of that, and how it can affect the markets and how gold affects things.
Yes. And the dollar definitely, think about if you're a manufacturer and you're trying to export to another country,
Yeah,
and they're buying in dollars and the dollar goes up in price, it costs them more. Importers, that's importers from another country, trying to buy US goods, it becomes more expensive. So a weaker dollar can help US exports in
right.
that regard there. But it certainly affects the market here. This
Yeah.
is the dollar against kind of a basket. You don't, it's hard to, anytime we talk about the dollar, it's what's the price of the dollar? Well, it's the price of a
Mhm.
dollar against, in comparison to another currency. This is just the dollar against a basket of other
Yeah.
currency here on that.
But it's a good thing to
Um,
watch. I'm glad you brought that up because it is it's interesting to watch that how it affects the markets and you can judge some things from there.
Awesome. Well, let's move forward. Let's just do a couple others, and I want to get to some individual stocks. Here's silver,
Mhm.
often fairly close to gold in terms of general price movement, although we've seen more extreme price movements from silver over the past year than we've seen gold. But that's been creeping a little higher, broken through the 50-day moving average. But all in all, we'd have to say this is kind of an area here between 70 and 90, that it's kind of found a slot in, I guess, so to speak. Um, and and there's other metals you can use, not necessarily what we call a precious metal, but here's copper. Copper is often used as kind of an economic sign because it's used more in industrial use. Potentially some more resistance up in this level for copper, I would say. We're getting near, well, the highs that we've seen here. Maybe tailing off. Maybe that is a little bit of a flag pattern there, though.
Yeah. And then it definitely shows that the definition flag, supposed to move to the other side and little pullback. So yeah, I think you're right on it.
Let's look at some stocks that are in the news here, let me just I'm going to pull them up. So Meta is in the news, and by the way, you can see on the graph here we
Mhm.
have earnings coming up, and you can see that's on at the end of the month. Basically, we've got earnings there. Uh, Meta is planning to conduct an initial wave of layoffs. So they've announced layoffs, or it's actually not announced. I guess Reuters is uh, Reuters is reporting it, and uh, they're they're planned for May 20th, with further layoffs coming later in the year. Citing three sources familiar with the plans, the company will lay off about 10% of its global workforce, or about 8,000 employees, in the first round of layoffs. So that's interesting news. Not, it's hitting the stock a little bit negatively today, I guess you'd say, down a little over 1.5%. What are your thoughts on the chart here, though, Ray?
So I'm liking the almost the flag setup for Meta. If you look at
Yeah,
that right
so
there.
just let me just kind of illustrate. We went up and then we kind of pulled back a little bit. And we went up and just a quick pullback. Went up, kind of pulling back. The
Yeah.
expectation maybe is the trend continues, Ray. Is that right?
Yeah. I mean, that's kind of what we're looking at. I mean, talk about layoffs and although it does affect, folks and it's unfortunate at times, but as for a company goes, um, that can mean that they're honing in on their expenses because that's what it
Yep.
is.
Yep.
And to the bottom line of the company, it can be very, very good. And so, that can help the stock price overall. So that's something to watch. And that's why sometimes, those kind of things in the news can be, looked at different ways. They're like, okay, they're getting a better handle on what's going on. They're getting more efficient. It can be more profitable. So,
Yeah. In fact, the funny thing is, it is down today, but I would say, in my experience, Ray, probably more often than not, when I hear a layoff announced, a significant layoff announced, you see the stock actually jump up in price a little bit.
yeah,
It seems kind of counterintuitive in a way, um, because as you mentioned, it's sad for a lot of people, and it's unfortunate, part of the system, but that's how it is today. Though we are actually seeing a little bit of a negative
yeah.
move there on Meta. Let's look at some other companies in the news. Here is Alphabet. They're in discussions with Marvell to develop two new chips.
Mm,
Um, and those chips will focus on running AI models more efficiently. And this is, again, a report from Reuters. Um, Along with that, KeyBank analysts raised the firm's price target to 380 from 370. So not a huge bump up in the price target. They keep an overweight rating on the shares. So down a little bit today. Not the market's not really taking that, but I think in context, again, we've had
mhm.
quite a run up here,
Yeah,
and some of this, it may not be the news so much. It may just be the overall market right now that's doing that.
yeah. And one of the things I kind of have fun with in a live workshop is we talk about how stocks move. Stocks don't just always go up and up and up
Yeah.
and up. They're going to do a little pullback. They're going to do a breath, and you might be seeing that now. And that's why those flag patterns kind of occur, and that phenomenon you see in pricing. Um, and you got to trade what you see, not what you think, hope, want, feel. And you know, we're seeing a run up. And is there going to be a pause in there, or is there going to be some takers for some profit at time? Is it hitting those levels of resistance, which it kind of is right now? And see how that how that's effects. One of the things people say is they go, well, it's too high, right? Brent, I know you've heard that before. Well, it's too
Yes.
high,
Oh,
you
many
can't get down.
times. Many
It's too
times.
high. But it was if you say that, it was the same thing back in on the November the 17th. It was too high then too, because that was the high back then.
Yep.
And then it was too high on January 8th time frame right there. Yeah, that'd have been too high. So then you made a high. So
Right. And
you,
this, I mean, you can really take this to an extreme. Take a company like, let's do NVIDIA, and here, let's go for a
there
little
you
bit of a
go.
longer term graph here. And you could say, I mean, there were certainly people there, Ray, that were saying, this is way too high for NVIDIA. Look at how much this has gone up
Yeah,
here. And you could say the same thing there and there. And I'm not saying you should buy blindly every time a stock goes up, but I'm just saying it's
yeah,
not too high necessarily. But when a company does have a big move up, very often what happens is if it comes quickly, you get a little bit of a retracement after the move up and then before it continues up.
exactly.
And so goes up, retracement. This is a weekly chart here. Well, this is NVIDIA, but wouldn't surprise you to see a little bit of a
Right.
breather, so to speak, on that as we're
And,
looking at that.
and we're not telling you folks that it's always going to go higher, always going to go higher, but the market is bullish in nature. I mean, the whole reason there's a market is people, companies are in it to make money and they want to do better. And so you have to understand that as well. But I think that you're doing yourself a disservice if you look at a chart and go, well, it's too high, I can't get in,
Yep,
you know.
no
And so
doubt.
just be aware of that.
Here's Amazon. Let me go back to our this. Another example of that. I mean, it's run up. Doesn't mean it can't go up, but the breather, so to speak, the
Yeah.
consolidation isn't a shocker on this. Amazon's in the news. KeyBank raised the firm's price target on Amazon to $325 from $285 and keeps an overweight uh, rating on the shares. But again, I mean, that's a big move. Um,
Yeah.
how much? Oh, come on.
Probably about another 13 or so percent, probably.
It was up,
Oh, 28. Look at that.
yeah, 29%. Now it's pulled back a little bit here on that.
Yeah.
So coming now, of course, we say this. We've got earnings season coming up, so we don't have
Yeah.
earnings on this week, but we do have some companies out on earnings, coming out with earnings this week. Here, Ray. Here's a few of them. Texas Instruments coming out with earnings this week. This is a company where, we'd probably say, yeah, possibly some resistance there.
Hey.
So far, looks like we may be breaking it. It's a little bit early to maybe tell, but I'll tell you what, when earnings comes out, it kind of doesn't matter what the trend or support or resistance are telling you. Things can change with earnings.
Yeah. And that's, one of those reasons that volatility number starts spiking a little bit. And you do have earnings season come up. So we went back to that VIX chart earlier, the market knows earnings season is upon us.
Yes.
And you'll see that VIX typically turning up a little bit there as well. But yeah,
Yep.
look at that. I mean, broke resistance, and it's making an all-time high. So
Yes.
again, that kind of brings us back to that comment we made earlier. You got to be careful about shying from all-time highs because it doesn't mean it's it. It can never go any higher.
Yeah, and so what some traders will do is they'll say, well, look, earnings are coming out. I'm going to wait. Like, let's say you're interested in Texas Instruments. Some traders will say, well, I'm going to wait until earnings passes and that volatility. But of course, the company could go up on that.
Yeah.
But by the same token, it's you you just if you're going to do a longer term trade, it's inevitable you're going to hit earnings. Longer term investment, and it's inevitable
Mhm.
you're going to be holding through earnings. So if you look at the underlying fundamentals and it looks good to you, but from a trader's aspect, this certainly adds an extra bit of variability and uncertainty that a lot of people like to
Yeah.
avoid here. Okay, let's look at a few other companies that are coming out with earnings this week. Here's Ulta. So, sorry, let's see, that was, um,
Yeah. No, it's
that
an
wrong.
upgrade. They have an upgrade, I think. Ulta
Yeah,
does.
that's an upgrade. I said earnings. This is an
Yeah.
upgrade. Ulta had an upgrade. So So let me just mention that. I had that written down on the wrong list there. Jeffries upgraded Ulta. This is Beauty Supply, for those of you who aren't aware, to a buy from a hold with a price target of $700, up from $635 there. So thoughts on it from a technical standpoint on this chart here, Ray?
So yeah, that big gap down. One of the things that you hear this a lot in our workshops is, oh, the gap's gotta close, it's gotta cover. It's like, no, it doesn't.
Yeah.
So, one thing that you will notice a lot of times, folks, and on this chart it's actually right on it. Look at that gap that you just drew, that bottom, when it broke through support, became new resistance. Could that be resistance again around that 575 level? It doesn't have to fill. Now, with the upgrade, it'll be interesting to see how we have and how it reacts when it gets to that area. Is it going to come up and break that resistance level and potentially move to the 625, which would be the next level of resistance?
Yeah, when a
Um,
company's coming down like this, you're going like, well, when is it going to turn around? Well, of course, you don't know, but you look for signs, and some of the
yeah.
signs are if you see higher highs, okay,
Yep.
and so we're creating something in that higher
Yep.
lows, and that's what we're looking for. Now, that doesn't mean it's going to continue up necessarily. We do have a resistance level to contend with, but that
Right.
could be the sign of the change. But we'll see. This one we are past earnings on there. Um,
Yeah,
and
I think that 575 level, Brent, if you go back to December, that gap back there, when it had the earnings and it
yep,
broke up through that. But look at that. It's a pretty heavy level right there.
yep.
And so it'd be interesting to see how it reacts when it gets that same area again.
Yes, and James says it's less than the 200-day moving average. It's less than the 50-day moving average
Yeah.
too. So there's potential resistance levels up there. We have broken through shorter term the 20-day moving average on that
Yeah.
chart there. On that. Okay, let's look at a few others here, Ray. Let's go to another upgrade, and then we'll go to downgrades to be
Right.
an equal opportunity person here. Uh, BIIB. So this is Biogen, and this has been upgraded to overweight from equal weight with a price target of $250, up from $200. This is from Wells Fargo. If I didn't mention that, Wells Fargo upgraded it. The firm believes the company's new revenue streams from its immunology and kidney pipelines reduce its reliance on Alzheimer's. Uh, so anyway, this is the focus is shifting to Biogen's late-stage pipeline. The analyst tells investors in a research note. So
So,
hey,
hey, Brett,
yeah,
right there on the 180 level, draw that resistance level right there.
one sec here.
And then, yeah, right through there. Yeah, you can see how old support broke it, came to resist, and then now draw up from like the 4-6 level up to the 180. So you have like an ascending triangle forming right there. All right, and the last, yeah, right through there, nice
Okay.
ascending triangle. So it'd be kind of interesting to see how it reacts to that 20-day moving average, because it's been below all those things, but you're
Yes.
starting to get those higher lows. All right. I mean, sorry, lower lows. So you're moving up, and it'd be interesting to see what's going to happen right there. You got that today, again, very early in trading, but you got a little inverted hammer right there on resistance to see what's going to happen. Is that going to turn around? Is it going to break through? And that'd be a good, interesting for folks to watch, put on their watch list to see, how that price action occurs right through that area. It's
Yeah,
just barely
just
breaking it.
yeah. So as we zoom in on this just a little bit, you can see, well, here we are right now. And so it's we're right at that moving average though right now. So
Yeah.
there's different ways to consider a resistance level. And moving averages can be a resistance level. High
Yep.
prices can be a resistance level. This was the ascending triangle we're talking about. When we talk about ascending triangles, generally it's, we go into it thinking, well, that could be a bullish pattern. If we break above, that would be, so break above this horizontal resistance line, we would consider that to be more of a bullish pattern. If it breaks below, that's a different story. Then it turns more bearish there. So
Right.
those are the kinds of things that people will look at, traders will look at in terms of this, in terms of trading this here. But hey, for what it's worth, up almost 2% today. Good news, I guess, from the standpoint of Biogen investors there and their upgrade. Let's look at a few downgrades here before we run out of time. Intel, which is of interest, Intel has earnings this week and it was downgraded. But Intel's just been on a tear
Yeah.
lately. In fact, on X, about a week ago, I posted, maybe it was a couple weeks ago, the performance of Intel in terms of this versus the rest of I can't remember whether it was S&P 1, I think it was the S&P 100,
Hmm.
over the past month, the past 6 months and year to date or something like that. And it was the top performer over all these different time frames. Little bit of a sell-off, little consolidation, probably not a shocker there on that.
No.
KGI Securities downgraded Intel to neutral from outperform with a $71 price target. So basically the run up basically hit their price target on that.
Yeah.
But hey, we got earnings coming out.
Yeah. The interesting to watch this as well. I mean, beautiful flag setup coming in earnings. It's going to be interesting to see how that report comes. That's when you wish you had one of these that it actually worked. Nice crystal ball.
Exactly.
But that's the way it is. But
Yep.
yeah, definitely one to watch. See how the earnings affect that. And good earnings could create a nice bump there.
Okay, let's do one more here. So this is an interesting one. Barclays downgraded Avis Budget. That's this, CAR, good ticker. You always gotta like good tickers here. So this is a good ticker. From equal weight with a price target of 150 up from okay. They
Downgrade.
downgraded it to underweight from equal weight with a price target of $150 up from $95. So that's kind of a weird one. They downgraded it to underweight from equal weight, but they actually upped the price target here on this. But listen to these price targets. The price target's $150 on this, up from 95.
I think somebody missed something.
Yeah, exactly. So their price target is down here. It was down here. They moved that up, kind of like accepting reality that, how many days in a row has this gone up?
A lot.
Crazy. So
I don't even know.
I don't know what to say.
But,
I don't know what to
these
say
are one of
about
those, Brent, that it's like you just can't explain.
it. Yeah, exactly. Okay, we're out of time, but let me just mention one last thing, and that is, here's our sector performance just over the past month. This last column right here is over the past month, how sectors have been doing. IT is at the top of the list. This is staples up there, materials up there. The laggards, energy, probably not a surprise given that we've seen on oil prices of late. Healthcare, I think I said this was staples. I meant this was discretionary. This is staples, and this is utilities there. So there's their sector performance for the last month here. For the day, mixed, about half up, half down. That's today's performance there on those.
There it is.
Hey, Ray, thank you so much for joining me today. I always
Man,
appreciate having you on.
Thanks for having me, man. It's been a great morning, and I appreciate you. And thanks for all those who tuned in for us.
Wonderful. Well, yeah, we know there's other things you can be doing with your time. We do appreciate when you join us here to kick off your day, kick off your week in this case. got a lot of earnings. Earnings season is ramping up. It's not the biggest week of earnings, but it's becoming more and more of a factor. We'll see what happens in the news, how that affects the market. Remember, don't miss this or other webcasts. Subscribe to the Trader Talks channel on YouTube. It's easy, it's free, and it helps you to see the content that is of interest to you. Remember, there's millions of videos out there on YouTube. How are you going to see the ones that are of interest to you? You subscribe to the channels that you like. And hopefully this is one. And if you did like this webcast, we do appreciate a thumbs up. Helps us out, helps us to promote the cause of free education. Everybody, have a wonderful rest of the day, week ahead. Thank you, Scott, in the chat. And we'll see you later. Bye-bye, everybody.